What's up, guys? Welcome to another podcast. I'm here with Christopher Soto,
What's up,
Century
brother?
21. So we're here to talk about condos.
Condos,
And,
yeah.
man, things get harder and harder for condos, especially in our neck of the woods. We're getting hit with fires, and insurance got hard, and Fannie and Freddie keep making changes. And I mean, there's a lot of rules with condos, and when you're in lending, especially when you're trying to get your clients financing, you have to be very careful, making sure the association knows what they need and how to get it to you.
Yeah. So and right now we're facing
Yeah.
a setback with a transaction on one of my listings. Edgar is financing the loan. What are some of the things that you're
Right.
seeing now that the HOAs are asking for that they weren't before?
I mean, so what's happening is the lenders back in the days, up until recently, whenever you put more than 10% down, they did what's called the limited review when you were doing condo financing with Fannie and Freddie. What that meant was they just did a small form HOA cert where they just asked pertinent information, making sure there was no litigation, making sure there wasn't more than like 15% delinquency ratio, making sure that they had certain things in place in the association without having to ask for a budget, without having to ask for too many financials. They just asked for basic information. Whenever you put less than 10%, now it would become a full review. What that meant was now you need all the financials, you need all the budgets, you need a reserve study, you need a balance sheet, you need a profit, you need everything. You need the master insurance policy. And it goes more to full debt mode where they start asking for the board minutes and to make sure that the HOA is solvent. And a lot of times, these associations, depending on the size of the community, they have a third-party management company that handles all that. So the community just has another third party that handles all the paperwork. Right. So it's a lot easier to deal with.
Faster.
But when you have an association with less than 100 units, 20 units, you have
ours.
A mom and pop shop that handles the papaperwork. When they're a little unorganized or they don't do things on a daily, then it gets a little bit of into a situation where when we ask for documentation, they don't have them readily available and they can't produce them easily. So now we're in a standstill where we have to wait for them to produce them. And sometimes it could take a little time, or it could become an issue because they're not used to having to do this kind of documentation because they don't get asked for that frequently.
Or in this case, when we asked her, she said that it wasn't required, but we explained to her, right?
Right.
That, hey, things have changed.
Yes.
So now we're working together, trying to get everything together, but unfortunately, it's.
And as a buyer, me personally, if I'm buying into a community, I do want to make sure that based on the bylaws, based on the CCNRs, that who's ever running the association, who's ever running the funds, is showing that they're doing the process the way it should be. So if you're having board meetings, there should be board minutes that get documented by the secretary. If you're doing an annual budget, there should be the right allocation to whatever should be allocated for you to be able to sell your unit when the time comes to any kind of financing that's available as marketable for agents, especially with the things that change so often with financing. So that's something that we hadn't had to worry about, obviously, because those don't sell that often, and if it did, they probably sold with a bigger down payment, conventional, and it was very easy back even last year was easy to get rid of something when you put a bigger down payment.
Or if you're buying cash.
Or you're buying cash.
Yeah, and then you could still look at that.
You can bypass that.
You could bypass that because it's not a lender requirement.
Yeah. So just to be transparent is these days the banks will ask to look at the financials because when it comes down to it, a lot of people that buy into these associations, when they start lacking services within the association, and not saying this particular complex, but if you have a complex that, for example, has a pool and they lock up the pool because there's no money to maintain the pool, or there's a gym that there's no money to maintain the gym, and you're losing services, and they're blaming that there's no funds, and then all of a sudden you start missing mortgage payments, and then the bank calls you and say, well, I don't have anything to do with this because you guys aren't paying for my pool, you guys aren't doing this, and the bank's like, well, we have nothing to do with that.
That's the HOA.
Your mortgage is your mortgage. You have to pay us the mortgage. Go deal with your HOA when it comes to the services, and you're blaming the bank for not making your mortgage. Then the mortgage companies then say, well, I guess there's an issue there. We shouldn't have not lended to this association.
Right.
So let's look into financials first before we give you a loan with this association.
Yeah, there's always going to be problems, and then you find solutions, and then they put
Restrictions.
Restrictions, yeah.
So, in a sense, is yes, the buyer wants the property and they'll do anything to get into it.
Yeah.
But then there's a catch-22 is once they get into it, then they say, well, why didn't you warn me that there was issues with the HOA?
Yeah. and in this particular one with the one we're working with, they've replaced the roof, they do the maintenance. I think it's just a lack of communication, and maybe they're not up to par because there hasn't been a lot of sales in those 24 units because it's only 24 units.
Right.
So we're working with them trying to come up with a solution.
Financially, I'm sure they're stable. It's just that they don't have the documentation to support and keep up with what needs to happen. But I mean, and this is why the banks ask for this stuff, because they want to make sure that anybody that buys into it does not give that excuse down the line saying, hey, look, why didn't you guys warn me that there was an issue? So unfortunately, this is just going to be the process from now on, and things will get a little bit tighter and tighter. And I just mentioned to Chris, like sometime next year, instead of, for example, Complex having to have a minimum 10% reserves of the revenue going in, starting next year, it's going to be 15%. So little by little, they're going to want to make sure that the associations have more reserves, which means that you're probably going to start seeing steeper HOAs because you're going to need more reserves. So that means that you're going to need an association to be a little higher to be able to have those reserves. So if you want more information on how this works, and again, if you're looking at condo townhouses, make sure to reach out to us.
Let us know.
We've seen this enough and we know how this works, so make sure you reach out to us for more information.
We're here.
See you guys.